In this latest video, as part of our technical analysis trading strategy series, we're going to take a look at some of the basics of using volume. Hello, I'm David Jones, and this is the latest stage of our trading strategy series with Trading 212. We've had a few requests in recent weeks in the comments, so again, to prove that we do actually read them, I thought we'd take a look at volume. So there are volume indicators, but this week we're going to start right from the basics before we get into an indicator next time round. How is volume shown on the chart? What does it mean? And how can it help us when it comes to deciding which way to trade? So first of all, let's take a look at the theory. Let's take a look at how we might represent volume on a price chart. I have to say, even by my normal poor standards of drawing, this is maybe one of the worst drawings I've done. But let's look at this. So up here, we've got the price. So we've got price bars. And traditionally, volume gets shown as vertical bars at the bottom of the chart. The amount traded doesn't matter so much. And let's pretend this is a share price, and that bar there represents, I don't know, 50,000 shares traded during the day. It's not that important. What is important, what people will look at, sort of right from the basics, right from the off, is volume increasing day by day in this example, or is volume decreasing? So they'll look at certain things. For example, this is clearly a made up example, but this day here, so the trend had been down. This day here, the price pushes lower, but it does it on what is relatively lower volume compared to what we've seen. So somebody who was looking at volume may take the view, well, actually, does this mean that the downward pressure is running out of steam? Then if we jump to the next day, we have a situation where the market reverses, at least for one day, but does it on quite a big increase in volume. So some people would say, well, actually, does this confirm that actually the trend is running out of steam and maybe it's time to buy? So it's really the relation of volume bars to the most recent volume that people tend to watch. So if we have things, and we'll look at some real examples in a minute, because it's much easier to look at some real examples and they look much prettier than my scribbles. For example, if we have a breakout, if the market breaks a big level, if we're looking at volume, if it breaks it on relatively low volume, then some people will be concerned that that's not a valid break. If it breaks it on a high volume, there's a lot of interest behind this breakout. There really is, activity pushing this market higher or lower. If we're talking about a breakdown, they'd see that as a more valid example. So this is the basics. It's all about the bars representing how much was traded in that particular day, hour, whatever time frame we're looking at. And it's all about the relation of the bars to previous bars at its most basic level. So there's the theory. It's not so much about how much volume was traded, how many contracts, how many shares, all this sort of stuff. It's all about how was the volume maybe today or over the last couple of days compared to how it's been previously. Now, I tried my best in that drawing. It's not my strong point. So let's take a look at some real markets and some real examples. I thought we'd start off by looking at a share. So this is the US share Netflix, the popular online streaming service. So what we've got here, this is a daily candlestick. So we've got daily chart going back to, where is it, May 2017 up to the time of recording, which was March 2018. So here's the candlesticks. Hopefully you're all familiar with those. And then down here, these are the volume bars. So clearly when we have a high volume bar, like here, on the 17th of July, looks like we could have had results from Netflix then. That suggests that volume was much bigger, or it is saying that volume was bigger than the previous day. Okay, so we can see a change there in volume. Let me just pick up on how we might have used that. The price of Netflix had been, for the period we're looking at, had been stuck, had been trapped by this resistance for about 2 months, by around about $168 a share. Then we get the breakout, and again, I'm guessing this was on an earnings update. So they announced some results. It's quite gappy around earnings, Netflix, if it surprises the market. So it broke out, it finally broke this big level, and it broke it on much higher than usual volume. So someone who was using volume as extra confirmation could see that as, well, this looks like it's going to be a valid breakout. It doesn't mean that it's just going to suddenly go off to the moon. but it does mean that, well, actually maybe this is a valid break. And we did see the market push higher for about a week, sold off, tests the breakout area, then eventually moves higher again. Let's just pick up on the next sideways bit for Netflix. So again, it's here. So we had, by October, it had traded as high as about $205 a share, but then spent the next, 3 months or so really doing nothing. Starts breaking out. We don't really have any clues from volume. Volume is a little bit flat, so we might have been a bit suspicious that maybe volume isn't telling us too much here. But then volume, you can see volume really starts to pick up. Look at the change in volume, the size of the bars compared to what we had seen. So again, some clues there that there was some real momentum, some real buying behind the price of Netflix moving higher. So the traditional way of using it is as maybe extra confirmation. If a level breaks or if a trend is in progress, that there is actually some meat behind this trend. It's not just moving on fairly thin volume. If it's moving on lower volume, then maybe we want to be a little bit suspicious. So the classic way of using it, if the market's trending up, we should see more volume on the upswings. If the market sells off and corrects, we should see volume dip back. If the market breaks a level, increased volume normally adds more weight to the fact a level has been broken. I've flipped this over to the currency pair, pound US dollar. It's the zero spread pair we're looking at here on the Trading 2-on-2 platform. What's interesting here actually is how volume may have made us think, not trust the move we'd seen on the chart. Look at this day here. So we have a day, the pound had moved really strongly through January. We've gone from 135, trading as high as 144 nearly. That's a big move for a currency. But on this day here, the market does move out to a fresh high. That's normally a positive. But by the end of the day, the market has turned around. We've got almost what's known as dark cloud cover there. We did a video on various candlestick patterns, so if you're not sure what that is, just check it out. And we saw all this happen on really high volume. Just look at the volume bar here. So that's much bigger than the volume we'd seen before. So you could say, well, actually this reversal that we've seen, even though the market's pushed out to fresh highs, clearly there's a lot of interest in trading on this day, and we've left an obvious high behind. So if you thought, well, actually maybe this is a false break, we're going to go short with a stop above those highs there. So there's interesting, I think, where volume maybe confirmed the candlestick pattern that we were seeing. Here's a much shorter term example. This is the S&P 500, so the broader US stock market index. It's a 10-minute chart, and it's here we go. We can see the move here. So market sells off from about 27.52, trades down towards 27.45. Then we get this big move up, relatively big, compared to the previous 10 minutes, and you do see volume starting to pick up down here. So we do see an uptick in volume when the market turns around. So again, maybe suggesting that sentiment's starting to change, and a lot of people are interested in trading down here, possibly seeing a reversal, and the market does go on to rally. So there are ways that volume can give us extra insights on top of what the price is doing. So I think there were some examples there where volume may have added a little bit more to the picture when it comes to looking at what the price is doing, whether we're looking to confirm breakouts, does it look like a false breakout, trend turning points, all of this sort of thing. I think volume can add something to that. I've got to hold my hand up here and admit that I hardly ever look at volume. I think when I first got involved in markets in the 1990s, it was FX markets. There wasn't really any official volume because it's an over-the-counter market. Things have changed slightly since then, but it's a habit that I've never got into. Maybe I will do a bit more after this video today, but hopefully for you, it might be something that fits in with your own particular trading approach and use it as an extra confirmation as to what's going on with the price chart. So we'll start wrapping things up there. As usual, if you have any different ideas as to how you can use volume, just leave us a message in those comments down below. If you like the video, click on the thumbs up, and to never miss out on the stuff we produce during the week, we do a whole load of different videos. We look at cryptocurrencies, euro, gold, oil, trading strategies like this. Next time around, we'll look at a volume indicator. So to never miss out, if you click on the subscribe button there, and then just make sure you've clicked the alarm bell notification down there, you'll get notified every time a new video gets uploaded. But for this week, we'll leave it there, and I hope you have a good trading week.